with that done, I want us to relook at this setup in the perspective of head and shoulders. I have already done a video about head and shoulders before. This is typically an ICT 2022 model with a engulfing candle or dealing range theories entry model. So looking at it in a different perspective, we can have a look at it. First of all, just start again from for the 1 hour fair value gap. I said in the video I did, I said that if you are forming a head and shoulder pattern, that pattern needs to form at a key area, such as a fair value gap or an inverted fair value gap, right? So we have this, and then price closes into this fair value gap and then drops lower. Now it gives us a what? It gives us a change in state of delivery at this point, not this point but at this point. Now this change in state of delivery will help us define whether this is a pattern or not. Going to the 5-minute time frame, now I want to have a look at what is happening. You see what is happening? This is a typical head and shoulder pattern. You can have a look at it this way: this shoulder drop, and then the head inside a key area, and then a drop, and then a shoulder, and then further drop. Okay, so this is using a circular. This is a shoulder, the left shoulder, and then we have a head, and then we have the right shoulder. If you remember what I said in the previous video about head and shoulder patterns, I said once we have a head and a shoulder pattern forming, and then price breaking below or breaking structure like this, going lower, we are expecting now the right shoulder to come up and form, and this right shoulder needs to happen at a key level, just like this fair value gap here. And now we said this key level has to be either a fair value gap or a breaker block or an inverted fair value gap. Those three key areas are the ones we use. So this left part, this right shoulder, where does it form? We have this breaker block here. A breaker block is the last down close candle before a series of candles that goes up to sweep liquidity, and this is the liquidity that was swept. And remember, this is happening at a key level, so it gives us a very strong conviction that price is now going to drop lower. Now as this is happening, we have this breaker block, right? And then you also have this inverted fair value gap. These two areas within the same zone give us a very strong reaction point, and after this reaction right here, now you want to implement an entry model of your choice. Now at this point, you can take an entry based on your favorite entry model. One of my favorites, I have two. One of my favorites is just to wait for a bullish engulfing candle or bearish engulfing candle of this fair value gap, right? And this is the bearish engulfing candle engulfing this bullish candle right here. The moment it closes, you want to take an entry at this point, stop loss about this inverted fair value gap, and you want to set your take profit as you would have, or as I would have shown you before. This is still 5.09. The second entry model that I use as my favorite is, we have this bullish, bearish engulfing candle engulfing this from this fair value gap, right? So at this point is now you want to have a dealing range of this candle to the lowest point because it is engulfing this previous candle. Once this price opens, and this candle opens, it comes to the premium of this range, and that is where we take an entry. giving us this point right here, and stop loss above that point, and then you are now to set your take profit at another level like that, still giving us a 5 point. This one gave us a higher risk to reward ratio of 8.65 risk to reward ratio. Now, so that is the entry model based on the head and shoulder pattern. I will redo this head and shoulder pattern in a much clearer way, but I just thought I should do this in this perspective. That is the trade review of USD CHF.